Fear and greed are like the amala and ewedu of the stock market. They always come together, and when they do, things get interesting.
Exactly, right? Greed makes investors chase stocks that have already skyrocketed, while fear makes the same investors to dump great investment at the worst possible time.
It is the same circle every time. When stocks are going up, everyone becomes the financial prophet. Buy now, this stock is the future. Then, when the market dips, the same people are shouting, sell everything, we are finished.
Retail investors are always the last to enter the market and the first to panic. They buy when the market is hot and sell when it's cold. My people, that's not investing at all. That's just emotional gymnastics.
Hello, welcome to the Nigerian Investors Podcast, the unofficial podcast that tracks and reports on the activities of the Nigerian boss. My name is Mudi, and with my colleague Aye, we will be hosting this podcast. TNI Podcast is dedicated to stimulating a renewed enthusiasm among the general population with regard to the activities of the Nigerian Stock Exchange. Ultimately, the goal of TNI is to see that many Nigerians from all walks of life, both at home and in the diasporas, become active participants on the floor of the Nigerian Stock Exchange. Before we go further, we would like to place on record TNI podcast is solely for educational purposes and not a replacement for professional financial advice. Let's begin. Hey there, investors. Welcome back to the Nigerian Investor, the podcast that helps you make smart money moves while avoiding financial heartbreaks. I'm your host, Mudi. And as always, I've got my co-host, the man who is always calm, Aye.
You know me, Moody, I'm all about keeping my emotions in check. But let's be honest, even the best investors feel the heat when the market is playing games with your money, right?
That's right. Today we are talking about the two emotions that run the stock market more than economic policies, companies' profit, or even Elon Musk's tweets. That's fear and greed.
Those two friends of ours, right? Greed makes people think that they will become billionaires overnight, and fear makes them to sell their stock faster than Lagos driver dodging last month.
If you ever found yourself buying high out of FOMO or selling low out of panic, this episode is for you. Let's get into it. Fear and greed are like the amala and ewedu of the stock market. They always come together, and when they do, things get interesting.
Exactly, right? Greed makes investors chase stocks that have already skyrocketed, while fear makes the same investors to dump great investment at the worst possible time.
It is the same circle every time. When stocks are going up, everyone becomes the financial prophet. Buy now, this stock is the future. Then, when the market dips, the same people are shouting, sell everything, we are finished.
Retail investors are always the last to enter the market and the first to panic. They buy when the market is hot and sell when it's cold. My people, that's not investing at all. That's just emotional gymnastics.
Yes, that word is emotional gymnastic. You are neither here nor there. That is worse than a man that is confused.
Yeah,
Let's talk about greed. Greed is why people buy stocks just because they are cousins or a random guy on Twitter said this one will 10x in 2 weeks.
or worse, they see a stock going up and think, if I don't buy this now, I'll miss out. That's how FOMO, or as we call it, fear of missing out, that's how it just gets to you. Next thing, you're buying the stock at the peak, and then boom, the stock crashes.
It is like joining a party at 2 a.m. when the DJ is already packing up. The fun is over, but you are just arriving.
And let's not forget over leveraging. Some investors actually borrow money to chase big gains. But what happens when the market then turns around? They are left with nothing but regrets and huge debts.
The key lesson, if you are investing based on hype and not solid research, my friend, you're playing yourself.
Now, let's quickly look at fear, the portfolio killer. Fear is why people panic sell at the moment when they see red in their portfolio.
Exactly. A stock drops by 5% and suddenly people are acting like the world is ending. Meanwhile, smart investors are buying the dip and making money while others are running scared.
Fear also makes people to stay out of the market completely. They keep saying I'll invest when things are stable. But guess what? The market is never fully stable.
Never ever. The market is just like an undulating landscape. You see it up and down. That's the way it operates. That is like saying you will only enter Lagos traffic when there are no hold ups. My brother, you go wait tire.
The best investors can do is understand that markets go up and down. The trick is to stay calm and think long term.
That's true. Let's look at the circle of fear and greed. The never ending circle. Here is how it plays out. Optimism. Stocks are rising and everyone is happy. Then excitement. Prices keep climbing and the new investors start jumping in. Euphoria is the next stage. People think stock will never go down. Everyone is now a financial expert. And then all of a sudden, anxiety comes in. Prices start dropping, but investors convince themselves it's just a small dip. When the dips keeps dipping, fear will not creep in. The market crashes, panic selling starts, and that will lead to despair. Despair now sets in. Investors swear off stocks forever, and recovery. Smart investors start buying at low prices, and the cycle starts again.
And the interesting thing is that this happens over and over and over again, right? So if you recognize this cycle, you can avoid getting caught in the madness.
Yeah, so that will take us to how to avoid emotional investing. How do we beat fear and greed? Aye.
The first thing is to have a plan, right? Know why you're investing in a stock before you buy it. If you don't have a solid reason, step away.
Second, ignore the noise. Just because a stock is trendy doesn't mean it's a good investment. The social media is not a financial advisor.
The third thing is to remember to diversify. If all your money is in one stock, then you're setting yourself up for emotional breakdowns. Spread out your investment, spread out your risk.
Fourth, think long term. The best investors don't panic over short term drops. They focus on the big picture.
And last but by no means the least, set up stop losses and take profit levels. Don't let greed make you hold on for too long, and don't let fear make you sell too soon.
And that is it, investors. The stock market will always be full of ups and downs, but the best way to win is to keep your emotions in check.
So always remember to ask yourselves, are you investing with logic, or are you letting fear and greed to control your moves?
Mm-hmm. That's a good question to ask yourself before you plunge your money into the stock market. If you've enjoyed this episode, subscribe to the Nigerian Investor, share this with your fellow investors, and leave a review.
And don't forget to follow us on social media for more investing tips. Until next time, we advise you to invest wisely, stay calm, and avoid emotional heartbreaks.
Of course, stay consistent, stay curious, and stay invested.